For the most part, it's the companies that have leverage ratios that are over 5 times. But I think what we have to do is look ahead 12 to 24 months to see whether or not their cash flows can support this, even in a more difficult economic environment.
And take a look at, especially like Penn and Pinnacle. They're making this deal. It'll make Penn a very strong, even stronger regional player. Do you see opportunities for these regional casinos?
We do. We think that Penn's leverage ratio is going to be declining because of their higher cash flows, free cash flows, as well, from a leverage ratio of about 5 times to 4 times by the end of next year.
And there's also this issue that wages are rising. We saw Amazon throwing down the gauntlet. Casinos have a lot of low-wage workers inside. They just have a new union contract in Las Vegas with the Culinary Workers Union. What does it mean for the return on investment?
Most of the investment world believes that labor costs should rise about 3% per year, and that really hasn't changed. And with the newest contracts, it's fairly consistent looking ahead several years.
Okay.
When you see rising rates and you take a look at these debt to equity ratios, Harry, does the rate environment now and how it's changed, does that make you change the way you think about these companies? Or is this not even sort of at the incremental margins, an impact in your view?
It really is less of an impact than the markets seem to be worried about, in my view. And the reason is because most of these companies have swapped out much of their floating rate debt.
They refinanced and they locked in.
Into fixed.
Yeah.
So very few companies have floating rate debt that's more than 30% of their total debt structure.
Is the sector really being hit by China then?
Yeah, that's
some of it.
Yeah,
that's a good point. Some of it is. So if you take a look at Wynn's underperformance and Las Vegas Sands, for example, I think that could be more related to the worries about trade.
Yeah, talk to us about China and how much this sector and investors in it ought to worry about a slowing Chinese economy, a Chinese regime that is more belligerent with respect to corruption issues, more belligerent with respect to the United States and U.S.-owned companies, potentially.
I think it's that last point that's the most interesting one, because a company like Wynn and LVS own 73% of the equity, which is unheard of in China. And so they have concessions that will get renegotiated in roughly 5 years. And our sense is that ownership will come down as Beijing encourages that to come down, but it'll still be probably over 50%. The trade war is an interesting issue. Folks worry about that, again, probably more at this point than is reflected in the numbers. Just year to date, for example, visitation from the mainland is up 14%.
Yeah. When you take a look at how far these casino stocks have fallen year to date, I mean, Wynn Resorts is down 30%, Las Vegas Sands off 16%, MGM off 18%. Mm-hmm. Is this a buying opportunity? I
think so. I think that for example, in Las Vegas, investors are worried about next year's room pricing. I think it's an opportunity. This year in Vegas, group meeting and visitation is down 4%. Next year, we think it's going to be higher. In Macau, we think the growth rate is coming down. It should be about, we're estimating 9%. If it's just 5%, these stocks are undervalued because they are trading at the low level, both on cash flow and on free cash flow that should get returned to investors.
In terms of the trade war and what China's doing with capital outflows, there have been capital outflows from the mainland. And in the past, they have done things like limited the amount you can withdraw at ATMs, which have impacted the Macau businesses. I mean, do you see something like that as a possibility? I mean, you say investors are paying too much attention to this trade war, but I mean, tomorrow they can come out with this and bam, you got an impact.
I think that the capital outflows certainly have been an issue, but they were a much larger issue in 14 and 15. Mm-hmm. That's when you had some illicit capital outflows. Those were, I think, regulated. And when you think about the level of regulation, not only in Vegas, but now also in Macau, it's perhaps it's probably the second most heavily regulated jurisdiction that we look at.